How to use ATR in forex trading. The average true range ATR is a technical indicator commonly used in forex trading to measure market volatility. Developed by J. Wells Wilder, ATR provides traders with insights into the expected price range and volatility of an asset over a specified period. Here's how you can use ATR in forex trading. 1. Understanding ATR. ATR is not a directional indicator. It measures volatility. It represents the average range between the high and low prices over a specific period. 2. Calculating ATR. ATR is calculated using the true range, which is the greater of current high minus the current low, the absolute value of the current high minus the previous close, the absolute value of the current low minus the previous close. ATR is then calculated as an exponential moving average M of the true range over a specified period, commonly 14 periods. 3. Interpreting ATR levels. Higher ATR values indicate higher volatility, while lower values suggest lower volatility. ATR is not an absolute measure of price direction. It helps you understand the potential for price movement. 4. Setting stop loss and take profit levels. ATR can be used to set dynamic stop loss and take profit levels. For example, you might set a stop loss a certain number of ATR away from the entry point. ATR adjusted levels can help account for market volatility, ensuring that stops and targets are proportional to the current market conditions. 5. Volatility breakout trading. ATR is often used in volatility breakout strategies. Traders may look for situations where the current price surpasses a certain multiple of the ATR, signaling potential breakout conditions. 6. Position sizing. Adjust your position size based on ATR. In periods of higher volatility, you might consider reducing your position size to manage risk. 7. Confirmation tool. Use ATR as a confirmation tool for other technical analysis signals. For example, if you observe a price breakout, check whether the ATR supports the move by confirming increased volatility. 8. Time frame considerations. ATR values may vary across different time frames. Adjust the period of ATR depending on your trading style and the duration of your trades. 9. Combine with other indicators. ATR works well when combined with other technical indicators. For example, combining ATR with moving averages or trend lines can provide a more comprehensive view of market conditions. 10. Continuous monitoring. Regularly reassess ATR values as market conditions change. Adjust your strategy based on shifts in volatility. As with any technical indicator, it's crucial to use ATR in conjunction with other analysis tools and consider the overall market context. Additionally, backtesting your strategies on historical data can help you assess their effectiveness before applying them in live trading. For more details, watch my other videos, subscribe, ask a question in the comments, or contact me via email. See you soon.